Morning, Steve Free in Chicago with the morning grain comment. Yesterday we saw a little bit of short covering in the corn and wheat and a little bit of selling in the beans, but beans did come back near the close to almost being unchanged overnight. We've got beans and corn unchanged while wheat's up a little bit. So we might be seeing a little bit of short covering by the managed funds, at least the corn and wheat, as we move in further into the month of May. As far as the news overnight, I think initially there was some talk on the wire services that there could be some movement to a resolution to the trade deal when negotiators meet in Washington next week. There was also some talk that the U.S. might be giving in a little bit on a couple of key issues and that they might try to discuss slowly eliminating the tariffs in both countries. So we'll see if that opens up anything as far as China coming in and buying U.S. ag goods. Yesterday there was a report out that this week China's bought about 10 cargoes of Brazilian beans. That was negative to the futures market, fearing that maybe the crushers knew something about a deal being delayed. Certainly the Brazil beans are cheaper than U.S. beans, and that we also feel that by bringing Brazil beans into China, it's a more profitable crush margin, and we're seeing a little bit of a rebound in hog prices in China and crush margins in China, and so we'll just kind of see how things kind of play out if there is a deal. We continue to see weaker prices in South America. They're upping the production numbers in Argentina for both corn and beans, and it's probably the ratio between U.S. and Argentina corn favors Argentina, and the spread is probably the widest in 10 years. We also note that we got export sales today, might be on the low side. We're looking at something like 200 to 500 wheat, 600 to 1 million tons of corn, and maybe 400 to 800,000 tons of beans. Weather-wise, we look for at least another week, maybe two of rains across much of the Midwest. Could see some net drying in the southeast part of the United States. Could be a little drying in the northern plains, but temperatures stay cooler than normal, which may limit some of the planting. We are hearing that some farmers in the wettest areas are talking about the U.S. government program called Prevent Planting, in which they can get a certain percentage of their production if they don't plant anything. And so some guesses are as much as 2 to 5 million acres of corn could go to prevent planting if the weather pattern continues to be wet. You know, right now we're looking at soybean acres this year at 85 versus 89 last year, and corn 93 versus 89. Now the soybean corn new crop ratio has dropped to almost 2.2 to 1. Bean prices have dropped because of lower South American prices and the thought that farmers were going to switch maybe a little bit more acres to beans. And so because of this weather. So right now the discussion would be, will they take that prevent plant option and lower corn acres? And number two, will they plant maybe beans on it instead, even though the bean prices are lower than they were just a month ago? We noted that the March soybean crush was 179 million bushels versus 182 a year ago. We produced 442 million bushels of corn for ethanol in March, down from 473 a year ago, and we produced 1.8 million tons of DDGs versus 1.9 a year ago. There will be a private estimate out later today for the U.S. Winter wheat crop. Again, yields coming out of Kansas, Oklahoma, Colorado are all bigger than a year ago and bigger than average. So we'll see what they say as far as what they think the winter wheat crop production is going to be and what they feel global changes in global production numbers are concerned. Right now, I think that we're at resistance in July beans around the 860 area. I think that if there is a trade deal, we could go to 925. So if you're a farmer, you should be putting cash sale orders at that price level. July corn probably has initial resistance around the 370 area, then again at 374. If there's a deal, we could go to $4. So farmers should probably put some cash sales at that price level. And with wheat at around the 435 area, initial resistance is 441, and then maybe 450 to 460. So if there's a deal, we maybe get nearby Chicago July wheat at the 480 area, and we'll see if you want to put some sell orders there for your crop that you're growing in the ground right now at that level. So again, we're waiting for an announcement on a deal which should be friendly to prices. We're watching the wet weather, and if it changes in the acreage mix for U.S., we're looking at cheaper global prices for both corn, beans, and wheat, which offers them resistance in the marketplace. And the funds have a record short, and ideas are, will they cover those record shorts either into next Friday's USDA report, into a deal, or into weather patterns in the United States that might prove a little friendly. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.